Are you sensing a little bit of public fear out there in the markets and wondering what emergency measures you might take as an investor? Well, stick around and we'll talk through it. On March 28th, 1979, the Three Mile Island nuclear power plant in Pennsylvania experienced a partial meltdown in reactor number 2, marking the most serious accident in U.S. commercial nuclear energy history. Located near Harrisburg, the facility was considered an emblem of technological progress and a key player in the adoption of nuclear power as a sustainable energy alternative. This confidence was abruptly shaken when a combination of mechanical malfunctions and operator errors triggered a cooling system failure. Reactor 2's core began to overheat dangerously, leading to a partial meltdown that released small amounts of radioactive gases. Although no immediate injuries or fatalities occurred, what followed was a wave of widespread panic fueled by misinformation and inadequate communication from both plant operators and regulators. Emergency measures were enacted, including a temporary evacuation of pregnant women and children living near the facility, further stoking public fear. Gee, you think? To this day, the incident remains a catalyst for the nuclear energy industry's reassessment of risk, oversight, and transparency. Its lasting impact stretched well beyond engineering or safety reforms, fundamentally altering public perception and undermining confidence in nuclear energy as an economical and reliable solution to the nation's energy needs. Here then are 3 lessons for modern investors from the Three Mile Island accident. First of all, prepare for the unexpected. Need we remind you? Just like the cooling system failure at Three Mile Island highlighted cascading risks, retirees managing their savings need to account for the unexpected in their portfolios. Market downturns, geopolitical shocks, or health crises can trigger financial challenges that undermine your long-term plans. We've seen all of those just in the last 5 years. So have a plan in place that reduces the impact of black swan events on your total savings. Behavioral finance research emphasizes the human tendency towards recency bias, where we assume that current conditions will persist indefinitely. Knock it off, because this can lead to overexposure in high-risk assets during bullish markets. Retirees can instead protect their financial futures by building a balanced, intelligently structured portfolio designed to weather economic turbulence, preserving income streams and capital even in uncertain times. Yeah, nothing is perfect. Even good portfolios run out of steam occasionally, but you must avoid a total meltdown. Next up, clear communication can make or break investor confidence. Three Mile Island showed how poor communication in a crisis exacerbated public fear and damaged long-term trust. From an investor's perspective, this highlights the importance of clarity and reliability when working with financial advisors or planning financial strategies. Retirees in particular should prioritize relationships with advisors who communicate transparently, whether it's discussing risk levels, explaining account performance, or outlining how broader economic conditions may impact retirement income. Behavioral finance research reinforces that unclear communications heightens uncertainty, encouraging emotional and reactive decision-making. So let's not do that. Trusting clear, objective information can help you make more rational, long-term choices and avoid panic during volatile markets. Do we need to talk? If so, message me and we'll get something on the schedule. Finally, stakeholder perception can reshape markets. The aftermath of the Three Mile Island accident transformed public opinion on nuclear energy, significantly curtailing its growth for decades, if not an entire generation. Loss aversion shaped attitudes toward nuclear projects over those decades. Sectors like clean energy, healthcare, or technology are often influenced not just by financial fundamentals, but also by changing public preferences and, dare I say, government policies. For retirees aiming to protect their savings while pursuing growth, keeping an eye on broad, long-term trends can help identify which industries are poised for sustainable success and which may face broader headwinds. So the 3 Mile Island accident remains a cautionary tale for industries and investors alike. While innovation and growth provide opportunities, disruptions, be they technical, economic, or reputational, will constantly challenge those opportunities. Core lesson for retirees managing their financial future is clear, at least to me. Stay prepared for the unexpected through risk management. Seek clear and transparent guidance from your trusted advisor, and remain attuned to those larger societal and economic shifts that may just influence your financial outcomes. This episode of the History Lessons podcast is sponsored by Victory Independent Planning. Hey, are you ready to take the stress out of your retirement? At Victory Independent Planning, we put you on the right trajectory with our exclusive VIP retirement glide path. Our smart approach prepares you for what's next by optimizing your sources of savings and income, your medical and healthcare planning, your advanced estate and giving strategies, risk management and investing, and tax planning. Let us help you glide into retirement with confidence. Text Glide Path to 239-567-5477. That's Glide Path, all one word, small letter G, to 239-567-5477 and receive a link to schedule a complimentary consultation. Do it today to start your journey on the VIP Retirement Glide Path, because your future deserves a safe landing.